While most of Canada's housing market is slumping, Halifax is not. In April of 2025, home sales in Halifax were up 1.3% compared to nationally, they were down 7.2%. And in terms of average sale prices, in Halifax in April of 2025, the home prices were up 1.4% compared to being down almost 4% on the national scale. So why is Halifax bucking the national trend? And more importantly, can it last? In this video, I'm breaking down 5 reasons why Halifax is defying the odds of the housing market in Canada in 2025. But just before I get into it, if you're new here, my name's Andrew Stevens, and I've sold over 500 homes in the last 10 years in the HRM. And if you want to be educated on the Halifax real estate market, then hit that like button and hit that subscribe button. And if you're thinking about making a move in the Halifax and surrounding area and you'd like to get in touch with me, you can reach out to me anytime in the Calendly link below. Let's start off by talking about the numbers to give some context before I get into the reasons why this may be happening. So far in 2025, home sales in Halifax are up 1.3% year over year, compared to in Canada as a whole, home sales are down 7.2% year over year. And in terms of average sale price, right now, Halifax in April was up about 1.4% year over year, compared to nationally, the home prices on average in April were down 3.9%. So while Canada's housing market as a whole is down and many provinces are down, we are still ticking along here in Halifax. But the real question is why? And truthfully, I think there's a lot of reasons why this may be happening, but here's kind of the main points that come to mind. So first off, we have very low listing inventory in our market, so low supply versus the demand that we currently have from the buyer's side. For context, in Canada right now, we're sitting at about 4 to 5 months of listing inventory, which would be considered a balanced market. Now in Halifax, we're only sitting around 2 months of listing inventory, and we've been here for quite some time now if you've been following along with my videos, but that is considered a seller's market, and especially in those lower price ranges, this is very much the case. We have very little supply for the demand that we currently have. And if I break it down by price point in HRM, it's actually even more alarming. So if I look at the under $500,000 price range, this is in a seller's market at 1.1 months of listing inventory. If I look from $500,000 to $750,000, we're sitting just over 2 months of inventory, which is again a seller's market. If I move up the ladder from $750,000 to $1 million, we're sitting at about 4.5 months of listing inventory, which would be considered more of a balanced market. And this would be in line with the overall number that we're seeing across the country right now. And if I look at 1 million plus, that goes to a buyer's market at almost 9 months of listing inventory. So like I've said in a lot of other videos, it's really the tale of two markets here in Halifax, the kind of lower price ranges and the higher price ranges. But if you're looking to buy a home in the under $750,000 mark, the truth is there's a very good chance that you're going to be fighting against many other buyers to get into the property that you want. And there's really no end in sight here with this as far as I'm concerned, because the new construction homes that are coming to the market are nowhere near these more affordable ranges. And a lot of people, especially older couples that are living in homes or seniors, they are sticking in their homes longer because of the overall financial landscape and how much rent costs and all these things. So there's just not really enough new listings coming to the market in these affordable price ranges. So I believe buyers will be fighting over homes in these price ranges, unfortunately, for years to come. Another huge factor, especially with all of the uncertainty politically and economically so far in 2025, is the fact that Nova Scotia has a fairly diverse economy. We don't rely on volatile industries like oil or tech startups the same way that some other areas in Canada and across the world do, and this is helping us stay afloat. With large employers in healthcare, government, military, shipbuilding, and education, job stability has helped maintain buyer confidence amidst a lot of uncertainty so far this year. If you look on the screen now, there's an interesting table from Business Development Lab which ranks Canadian cities based on their vulnerability to US tariffs, and Halifax is number 35 of 41 on this list. This is no doubt a large factor within the stability of our housing market. The next big factor is relative affordability compared to the rest of Canada. Now, I very much understand that locals here in the Halifax area think that our real estate prices are off the charts, and that's obviously going to be the sentiment when prices have skyrocketed skyrocketed in the last 5 years by 63%. However, compared to the rest of Canada, we are still relatively cheap. We are sitting in about the middle of the pack in terms of the provincial list in the country at number 7 in terms of the real estate prices. And I can tell you that even though we've seen a huge decrease in interprovincial migration coming to Halifax, I would suggest that this is still happening quite a bit. In fact, about a quarter to a third of my business so far this year has been people coming here from out of province to live in Halifax. This would be a mix of me working with these specific buyers on the buyer side. Actually, a lot of them I've met from this YouTube channel, and a mix of me selling somebody's house, but the buyer is coming from, say, Ontario or BC or Calgary as an example. So even though this has decreased substantially since the peak in, let's say, 2021 and 2022, it is still happening a lot at this point, and that's having a major impact on our market overall. And by the way, a lot of these buyers, interestingly enough, because I know the talk is, the cost of living in Halifax in general, even outside of real estate, is too high. The fact is, a lot of these buyers are still working their jobs in Ontario. So for example, they're moving here, working remotely, making Toronto money, but they're living in Halifax and they're cashing in on big investments in Ontario and coming here with a lot of cash in their pocket. So they're not feeling that cost of living the same way necessarily that a local would, making the money here in Halifax compared to the same job that might be paying double or 30% more in Toronto, just as an example. Next up is overall confidence with local buyers about the real estate market. And this one is a little bit funny to me, but even with everything going on and the price points and everything, from my perspective and what I'm seeing in my day-to-day, the locals are still relatively confident in the Halifax real estate market. And really their only qualm with it is the overall price points that they're paying up front. But in terms of where the market is going and what they're going to expect in their investment moving forward, they're relatively confident. And I can't say that I blame them, because since 1980, the average sale price in Halifax year over year has only gone down one time, and that was in 1995, and it was only by about a few $100s. So is it a safe investment? Yeah, I mean, overall, I would say so. And I know, although a lot of people might get in the comments of this video and say the crash is coming, Halifax is screwed and the market's going to tank, the truth is it's shown a lot of resiliency, especially over the last 5 years, and especially over the last couple years with all the uncertainty within interest rates and economically and politically as a general statement. And even though those levels of affordability have dropped off over the last 5 years, we're still seeing kind of a normal level of activity in our real estate market. And the truth is, only a small number of people need to be able to afford what's happening to continue this market trending in the way that it has been. So for example, in Halifax, every year, there's about 5,000 to 6,000 sales, usually about 5,500 to 6,000 over the last several years as an average, if I'm looking at like a 10-year average. So only about 1% of people living in Halifax have to be able to afford what's happening right now for the market to continue kind of clicking along and going in the upward direction. So although, yes, a lot of people have been priced out of the market over the last 5 years, no doubt, because the prices have gone up so much and wages have only gone up about 8 or 10% in that same time frame. So a lot of people are being priced out as that affordability gap gets wider and wider. But as long as we have, 5,000 to 6,000 people a year that can afford it and that are going to be buying homes, that is going to allow the market to continue clicking along the way that it has been over the last several years. So the next question is, can this continue, or is the market going to tank? So for this one, I would say there's a few things that we need to look at and consider moving forward to kind of predict what is coming down the pipeline. So first off, will the unemployment rate start to rise? If this happens, this could have major impact on the Halifax real estate market as a whole. But again, with our fairly diverse economy here in Nova Scotia, I believe that will help curb this issue moving forward. And I don't think we're going to see the unemployment rate jump high enough to really have a substantial impact on our housing market in a negative way. And the next question is, will housing supply increase significantly enough to impact the market? And from my perspective, I do not think that this is going to happen. While there's a lot of construction going on, a lot of it is apartment buildings, not condos, luxury apartments that are very, very expensive. So that is helping our housing crisis, sure, to a certain extent, but in terms of the resale housing market, it's not. Then if I look at all the new construction homes coming to market, we're not really building what we actually need. We're building all kinds of homes that are $800,000, $900,000. So it's not going to bring the proper supply to the market that we need in terms of the actual demand that's in our market, especially from the local buyers here in Halifax. So yes, we're picking up the pace of construction, but not, in my opinion, in the right way. So I don't think we're going to see a substantial enough uptick in housing that's going to be felt on the resale front of things for years to come. And I wish we would get back to building some homes that are a lot more modest, kind of like the split level homes in, for example, Sackville or Cole Harbour that we were building 30 years ago. Something like that would be a great thing to build today, something modern, but not, blowing the price out of the water. So for example, if I had 100 listings tomorrow at $499.9 and they were like 1,400 square feet, 2 or 3 bedrooms, 1 bathroom, nice finishes, and a decent location, yeah, those would sell overnight. But the problem is all the homes coming to market are these great big overbuilt 2,700 square feet, $850,000 type of thing. So it's just not the right supply that we need. And the third question would be, what happens to the interest rates moving forward? Now, a lot of this is going to be tied to the bond yields in terms of fixed rates. And then in terms of variable, it'll come down to what the Bank of Canada decides to do amidst a lot of uncertainty with trade wars and so on. So it will be interesting to see. Will they continue to fall? Maybe. Will they start to rise again? Maybe, but I don't necessarily think they're going to skyrocket. So I think if they stay relatively where they're at right now, we're not going to see any significant changes in our market. But if they start to fall, that could create a problem for price points because that will inject further demand into a market that does not need it. So again, that could have a lot of upward pressure on pricing and upward pressure on sales if those rates start to come down, as more people will be able to qualify for homes, or it'll bump their budget up enough to get them into an affordable price range. But again, that's likely going to have upward pressure on pricing if that happens. But one thing is for sure, the rates will play a huge impact going forward in what's going to happen to our market here in Halifax and across the country in general. From my point of view, it's a very interesting and I would say difficult time to project where the market is going right now. But as a general statement, I would say that I am not anticipating a housing price crash. And some could argue that this actually already happened. From the peak in April 2022 to the latter half of 2022, the price points dropped significantly. But guess what? Here in 2025, the average price point right now is actually higher than it was at the peak in 2022. So we've already seen a pretty big dip and a correction already, and I don't really expect to see a huge one moving forward. I would anticipate a pretty modest price growth going forward compared to what we've been seeing since 1980. So again, from 1980 till now, we've been averaging 5.7% yearly growth year over year in the Halifax real estate market. I would anticipate somewhere between 3 and 5% for the next couple of years, probably more in the 4% range, maybe even 3.5%. But I don't necessarily expect it to be 7 or 8%, but only time will tell. And again, a big factor in that will be what happens with the rates overall. But as a general statement, I would say it's a pretty safe investment moving forward. It's only dropped one time since 1980 here in Halifax. And although a lot of people might come into the comments of this video and say it's going to crash, it's going to tank, at the end of the day, the numbers don't lie. And it's been a pretty safe investment since 1980. Now, if I compare my thoughts with the CREA forecast that was released at the end of the first quarter, I would say they're relatively in line, and CREA is projecting good things for Nova Scotia. For sales, we're projected to be the 5th highest growth in 2025 in the country and 2nd highest growth in the country in 2026. Now, if I flip that around and look at average sale price, we're projected to be the 4th highest growth in 2025, and then we're down a little bit to the 7th highest growth in 2026. The truth is, only time will tell, and it's a very interesting time within the real estate market with all kinds of uncertainty politically, economically, and so on. But if you're still here watching, I would love to hear from you in the comments below. What do you think is coming down the pipeline for the Halifax and Canadian real estate markets? And if you're still here watching and you get any value out of this video, all I ask is that you hit that like button and hit that subscribe button so you don't miss any of my future content. And that'll help push this out to more people like you who may be interested in seeing more videos about the Halifax, Nova Scotia, and Canadian real estate markets. And until next time, thank you so much for watching. I really appreciate your support and have a great day.